Hi guys, have you looked at the proposed Pay-As-You-Earn, PAYE amendments by the Kenya Bankers Association, KBA? Although left out of Kenya's budget for the financial year 2026-2027, President William Ruto and National Treasury Cabinet Secretary John Mbadi say the reforms will be implemented. But if adopted, how will they affect you who is formally employed? Today, we break down the proposed amendments. However, before that, let us look at what PAYE is and how it's calculated. PAYE is a method by which the government, through your employer, deducts taxes from your gross salary before you receive it. Think of your gross salary, which is your basic pay plus allowances, as the fresh spinach you buy from the market. This makes your net income the pay you take home, the shrunk down spinach after you cook it. Here is how to calculate your take home pay from your gross salary. First, subtract the compulsory payroll deductions such as NSSF, SHIF, and the Affordable Housing Levy. What you're left with is your taxable pay. After this, apply the KRA's progressive tax band, which is the income range to which your tax rate is applied, and subtract your mandatory personal relief. The mandatory personal relief is a tax credit applied directly against Kenyan residents' payee, designed to lighten the tax burden of resident payers. Now, the KBA's proposals, if adopted, would see a uniform 5% reduction in PAYE across all income brackets, while capping the top tax rate at 30%. This means that if you're earning 30,000 shillings or less, you will effectively be granted full income tax relief, as the proposal abolishes PAYE entirely. As a middle income earner making between 30,001 Kenya shillings and 300,000 Kenya shillings, the proposal calls for a reduction of the tax rate from 30% to 25%, resulting in a higher take-home pay. The KBA's proposal to cap the tax rate at 30% means the public and private sector employees will also benefit from the tax cuts. This will ease the rising cost of living and steep tax reductions for those employed in the civil and private enterprises. Understanding the Finance Bill 2026 helps secure your financial future, and Mula is here to keep you informed.